Hi, welcome back. Well, today has been such a quiet day, I tell you. Between the high and the low point, there's just a 60-point gap. So the lows that we hit on the index was 10,830. The highs were 10,890. And within that, we've just gravitated. As you can see, nothing much has happened through the day. In fact, cash market volumes as well are just about 18,000 odd crores or so. Not as much as what we've seen over the last many days. But let's talk about some macro issues. The GST collections have dipped in the month of November. My colleague Timsi Jaipuria caught up with S. Ramesh, the chairman of the Central Board of Indirect Taxes and Customs, and began by asking him the steps that the government is taking on the concerns of the traders on the refund process of the GST systems. Listen in.
We have given something like about 90,000 crores of refund since last few months. So it's a huge amount which has gone to all the taxpayers who are eligible for refund. The only problem as far as IGST refund is that several tax refund applications are having incorrect details. Imagine if you have an income tax refund in which you don't file the details particularly in the correct format. Would you get a refund? You wouldn't get a refund. So this is the same situation here with GST. People who have filed wrong refund claims, incorrect refund claims, cannot get refund unless and until they rectify the errors. So it's very important that these errors are rectified, and very soon they can be sanctioned by the system because it's automated. So one more thing I would like to say is that the refund system as far as GST is concerned, the ITC refund, that refund is actually partly offline, partly online. So now a new proposal has been put up to the GSTN and they are taking up very seriously, and they'll implement it very soon. They want to have a completely online system where not only the application but also the documents related to the refund, ITC refund, will be can be filed online by the taxpayer.
When it comes to collections, sir, if you see collections are slipping, and that is one of the major concerns, a lot of tax evasion is happening. How do you plan to meet up the targets when it comes to especially the budget estimates which said that the asking rate is over 1 lakh?
You see, GST is a new taxation system, and the first year we have seen how it has gone. The second year also we feel that there has been positive growth figures. You have seen 2 months where it has crossed 1 lakh. So there are positive indications also which we need to take forward, and I'm sure in the months to come there will be a positive improvement in the trends of revenue. We are of course strengthening all enforcement measures using data analytics. We have got the Directorate General of Analytics and Risk Management, which is deeply looking into all the data analytics.
What do you think is the immediate council agenda that can be taken up?
The council agenda yet to be finalized.
What could be the immediate challenges when it comes to council meeting that you would be able to...
We need to streamline things. We need to streamline for the taxpayer, make things better. The council will take a proper decision.
No rate correction?
We'll just wait and watch.
All right. One stock on my radar right now is the real estate company DLF. A sudden, downwards move in that particular counter. So keep an eye out on that. 2.5% down, and a sudden downward momentum has really come in. Now, ahead of the RBI's monetary policy, which is tomorrow, CNBC TV 18 conducted a poll on what to really expect from the monetary policy. And our colleague Ritu Singh is here with a roundup of what's expected. Ritu.
In the 2 months since RBI's last monetary policy, a lot has really changed, with the crude prices now coming to around $60 a barrel, the Indian rupee at around 70 against the US dollar, and retail inflation at 3.3% in the last reading. Yes, GDP has been somewhat of a mixed bag, but in the light of all of this, the respondents poll by CNBC TV 18 were unanimous in their expectation that RBI would leave the repo rate unchanged in this policy, and in fact, till the very end of this financial year. The majority expects the MPC will remain in a wait-and-watch mode and maintain its calibrated tightening stance, which was only changed in the previous policy. On the macro front, one half believes that the GDP estimate of 7.4% for FY19 could be lowered in the light of the slowdown that we've seen, but the other half expects it could be left unchanged. On the inflation front, however, remember the last time the MPC had set the forecast at 3.9 to 4.5% for the second half of this financial year, but 80% of our respondents believe that this this forecast could be lowered, especially given the benign inflation print we've seen in the last 3 months alone. Another subject that has, vastly dominated debates is that of liquidity. Now, RBI has been doing OMOs. It is expected to infuse another 40,000 crores before the end of the financial year. But the fact is that the liquidity remains in deficit in the system. But the respondents that we poll do not expect any significant measures on liquidity front to be announced in this specific policy. Only 10% in fact believe that RBI could cut the cash reserve ratio for banks to meet the liquidity demands, but the majority expects that that tool will not be used. The tone of the policy, lastly, may be more dovish, according to 90% of our respondents, given that retail inflation has been undershooting RBI's target for the last 3 straight months.
Okay, so nothing much expected at tomorrow's policy. Lata Venkatesh, our colleague, also caught up with the Citizens Monetary Policy Committee. Let's listen in to what they had to say.
The inflation numbers actually were undershooting the RBI's projections even before the crude oil price drop happened, and that was primarily because on the food side of the economy, we continue to see significant undershoot. And now with oil prices down almost $25 from the peak, the second half FY19 projections, in our view, look to undershoot almost by 100 basis points. And even in the April to June of 2019, we think that inflation could be close to 50-odd basis points below the projections. Tighter financial conditions, which will also bring down core inflation with a lag. So, yes, there is a case for a significant downward revision on the inflation trajectory.
I think what you're seeing is both, since the last policy review, a very different global and domestic macroeconomic environment. We should spend a minute on what's happening globally, which is, I think, global growth risks are now skewed firmly to the downside. US growth was driving the global economy. That's going to fall off as the fiscal stimulus fades. Europe disappoints to the downside, and China's growth risks are also skewed very much to the downside.
My sense is that growth is going to pick up, going to slow down significantly in the second half. I think everybody was expecting that in Q3, Q4 growth should decline, but the numbers suggest that the GDP numbers suggest that the growth has actually started her downhill in the second quarter.
You see, the concept of having a neutral liquidity stance, it's tough to change it very quickly. It has to be more of a thought-through decision. If there is some kind of fiscal compression, then liquidity will be even tighter beyond what the seasonal tightening is. So the requirement for OMOs are substantially higher over the next few months. The only thing that has changed is that because of lower oil prices, the BOP incrementally could turn positive.
The overall growth rate of the economy has been weakening steadily over the course of this year, and things are starting to look a lot worse now. Now think of the government's problem. We are already in December. If they want to give a fiscal stimulus, the only way they can do it is that if within the next couple of weeks they come up with a fresh set of demand for grants. Okay? I don't think that's happening. The time is too short. There is complete unpreparedness for it. So on that front, seeing additional expenditure commitments, I don't think is going to happen.
All right, crucial monetary policy, and that meeting is tomorrow. Let's now slip into a short breather on the show. But next, Future Group launches its largest food specialty store food hall in Mumbai, and we get you a sneak peek when we return.